morning. Good morning. All
Good
right.
morning. Good morning. Look at that smiling face there.
Oh, wow. Look at that echo coming in. So, hi there, guys. This is Vinny Chopra from the Vinney and Beau show. My co host, Vinny. Vinny is and Beau, right there. We come live to you every Friday at 9:30 Pacific. 9:30 Pacific. So thank you for joining us. And it's a show about loans, getting the best of the best of the best loans in commercial, residential, all kinds of loans, bridge lending, all that my partner does. And the syndication show, investing in apartments, in hotels, in assisted living. I've done 34, private placement memorandums and everything up to 441 million now and things like that. So please join us. And again, we have a great show today designed with a wonderful friend of ours, Badri Malynur. Good morning. How are ya?
Hey, Vinny. Hey, Beau. Good to be here. This is exciting. You got some fantastic music to get the mood going. Yeah?
Yes. Please, everybody watching us, please tell us where you're from. We'll be listening to you, watching you on the comment sections. As you know, we are live at 7 channels right now, which is in Facebook and LinkedIn, in YouTube, in Facebook group, and all over the country and around the world. So a lot of time people join us from anywhere in the world also. So please let us know where you are from, your name, and you may have some questions for us. Badri, welcome to the show. Love to find out more about your special company, Avastar. I understand Bobby Sharma reached out to me, I think 5 months back, maybe, and maybe that's the prototype of that, or anything. And I was going to look for your formal bio. John sent it to us. Beau, did you have it there? I was looking for this morning. I apologize. Usually I'm very much on top of things.
Yeah, John dropped the ball. No, I'm just kidding.
No.
I'm sure
I love
John.
to have it in the text. If nothing comes in my text, it's so hard for me to get from 150 emails,
No,
So,
I know.
yeah. Oh my gosh. So anyway,
I got it right here.
yes, sir. Let's introduce Badri in grand style, like we always do.
Badri is a co-founder and VP at AvastarInc.com, real estate investment technology platform that allows investors to build custom real estate portfolios. Badri has extensive investment experience spanning a large variety of assets, including real estate, stocks, bonds, crypto, commodities, options, and angel investing. He has co-founded 2 startups and has extensive management experience leading large teams at Fortune 500 companies. He has an MBA in marketing and a finance and master's in computer science. Whoa, that's pretty darn impressive.
Very good. Yes.
Thank you, guys.
So, Badri, tell us your humble beginnings. I know you're from India, right? Or Ceylon?
Yeah. I grew up in Bangalore.
Oh, Bangalore. Yeah.
So I came to Portland, Oregon 35 years back because my uncle and aunt are here. I mean, they've been here for 55 years or something like that. So, came here for my master's, did my, the thesis was in artificial intelligence, and stayed here, and I like Oregon. Once you get used to the rain, hey, you're cooking.
Sure. Excellent. So your background is very diverse. So take us, how you came in, like many years back. Like me, I came 46 years back now, by the way. Oh, wow. Long time back. But, how did you start and all that? Kind of take us through, and then up to today, what you're doing, right?
Yeah. So, I've always been an entrepreneurial person at heart. I come from a family of industrialists. So, and, even though I took academic route, my first company I started when I was 24 years old. It didn't succeed, but hey, you learn from your mistakes, right?
For sure.
And then I worked in Tektronix. I acquired by Danaher, a Fortune 500 company, ran various teams. I was the architect for one of their most complex instruments, and then ran their Indian operations. Did a couple of startups. One was startup which automated the process of recruiting. And then my wife and I run a technology training company as well. And we offer over 2,000 courses to Fortune 500 companies.
Oh, wow.
But more recently, something along your neck of the woods, I guess, real estate, Vinney's favorite. We wanted to start Avestor, which is a platform for investing in real estate. Happy to tell you more if you like, or if you have other.
Please. Yes. We are all yours. And also we want to share with the audience this special software. I know I looked through it, it's a little bit, and it's very cutting edge. Let's say that, right? Yes.
Thank you. So our vision for Avestor is to make it there are two aspects to it. One is think of it as the Robinhood or Fidelity of real estate. We want to make it as simple as investing in the stock market. So real estate is too complex right now. And you can invest in real estate investment trusts and things like that, but you don't get the big benefits of real estate. You don't get the depreciation benefits.
Right.
What we do is we have provided a platform where users can create an account, and we pre-screen hundreds of syndication deals and invest in a handful of them, and then slice them and build custom real estate portfolios. The key word, Vinney, here and Beau, is custom. So you pick and choose what you want. Think of us more like a salad bar. When you go, I don't know what you have in your salad, Vinney, but I guess you have some jalapenos, right? Spicy. So think of it like a salad bar where you say, I want a little bit of this, a little bit of lettuce, a little bit of tomatoes. You specify that. The whole portfolio is customized for you. And the beauty is we have spent hundreds of thousands of dollars in the technology and the legal infrastructure. Even though you invest in 25 deals, you still get a single K1. So the vision, to summarize, is to make real estate investment as simple as investing in the stock market. Think of us like the Robinhood or Fidelity of real estate.
That's cool.
That's very cool. I'm joining it. Oh my God. I'm going to log in right after the show, guys. Holy cow. I love Robinhood. I play market along with real estate, and it's a lot of fun.
Did you do some GameStop?
No, I didn't do that. But I did a lot of this. My portfolio is up 41.25% in 1 year. I'm choosing some good ones. Yeah.
So can you explain a little bit more? Let's just say you had 10 different syndications on your platform. And what's like the minimum I could come in with, or anybody out there? Is it a 10,000, 25, 50,000 buy-in where I can then go in there and let's say there was 10 syndications on the platform. I could put 5,000 over in Vinney's syndication. I could put 10 grand in another one of Vinney's. I could put it 5 in another. Is that kind of how it works? So I'm basically almost like a mutual fund for syndications in a way.
Bingo. But a customizable mutual fund. That's the key, right? So because when you go do a mutual fund, it's like a pie which is already cooked. You get a slice. Too bad if you don't like some ingredients in the pie. But we love Vinney's funds. So if you want more of Vinney's funds, you can't quite do that. You get whatever is already there in the fund, right? So to answer your question, the minimum investment is $25,000. We try to keep it low, but most of our clients have invested a lot more than that. And the minimum investment in the platform is $25,000. The minimum investment per deal is $2,500.
I see.
So for $25,000, you can get as many as 10 different syndication deals, and then you can choose what you want, right? Some people say, hey, I live in California. I have enough exposure to California. I don't want any of that. Yeah. Or I want more senior living. I want more self-storage. You can choose what you want of pre-screened deals, so you're not overwhelmed with choice of hundreds of deals. These are all pre-screened, and we have already pre-invested in them. So.
Now, let me ask you a question. See, I've done 34 of these funds, right? Which is for 506B, where I can take accredited investors and sophisticated investors. Right. So in this platform, Brian Martinez, hi, Brian, he's asking, is it limited to accredited investors only?
Today it is, because it's a 506c fund, because we invest in syndication deals. Our intent is to launch a public fund, which will be open to non-accredited investors, not right now, in a year or so.
Okay.
But today it is open only to accredited investors. Yes.
Thank you. Thank you. That's a good thing. Because as you know, it's going to be with the what's a crowdfunding, right? For accredited, sophisticated. I think it's Regulation A or something like that.
Exactly. So we might do a Reg A fund later. But one point I do want to bring this to your audience, because I think it's very important. SEC has become a little more liberal. There are the traditional definitions of becoming accredited, but assets 1 million, income about $200,000. I'm sure you are aware of this, Vinney and Beau, but recently SEC passed some regulations where you can take a Series 65 exam, even if you don't have the assets or the income. That I'm very happy they did that. That exposes and offers the opportunity to invest in this for high net worth people if they take the exam. And the exam is a great exam. I mean, you learn about a wide range of investments.
I'm so glad you said about the exam. I've not looked into it. For our audience, could you tell us, like, where can they go, or where did you see it? How long does it take to study it? And then you have to answer some very tough questions, I understand.
Yeah, no, it's not too difficult. I have played around with the exam, but I didn't take the exam, but both my children have, actually. So just for fun. And so it's called the Series 65 exam. You have a couple of options, but we would definitely recommend the Series 65.
Okay.
If you Google Series 65, you'll get a lot of links. There are some free resources there and some paid resources too.
Okay.
And it tests you on a wide range of investment principles and also regulations. It's a really good exam to take because the knowledge is useful for a variety of investments.
Beautiful.
The other thing I wanted to add is we really want to open this fund up, even though we don't have a public fund.
Yeah.
So if anyone who wants to join Investor, we reimburse you for the cost of the videos and the cost of the exam if you pass the exam and join Investor. Because our goal is to try to open this up to everyone. Real estate investing for the masses.
So we can, if they're accredited and they have self-directed IRAs and 401ks, they can use those funds in this syndication, assuming they're accredited?
Absolutely.
All right, perfect.
Self-directed 401ks and IRAs. So.
Okay, but hold on. I have a question on it because I come across that question all the time. These are the self-directed IRAs.
Correct.
Of only sophisticated investors. They don't have that net worth of $1 million, excluding their primary residence equity, or they're making $200,000 per year single, or their spouse together $300,000 in the last 2 years, with the possibility of making the same, which I teach in my academy. So if that's the self-directed IRA, are for those sophisticated people, they cannot invest from their IRA, right?
Yeah, unfortunately. So even the self-directed IRA is open only to accredited investors.
Exactly.
We do hope to launch a fund which will fix this, but not right now. So
not right now. About a year and a half or 2 years. No, this is a very good thing what you're saying. I mean, the Robinhood has revolutionized industry. I love it. I just love it. In the morning, I get up a little bit and see some of my top picks. If they're down, I buy them. After about a month or so, if they're a big day, just sell them, things like that. So it's pretty nice. So in your case also, can we buy and sell? Tell us about it. If
sure.
Yeah.
So today, what we do is we take an investment approach to this. We understand your needs, your liquidity needs, your cash flow needs.
Yeah.
So we try to build a portfolio which is aligned with your liquidity needs. So you can say, hey, I have a kid going to college 2 years from now, or I have somebody, I have to buy a house 4 years from now. Yeah. So we try to build the portfolio aligned with your liquidity needs. Of course, a lot of the investments we do are 3 to 5 years, the syndication deals, as you know.
Yes.
So to make it easy and provide more liquidity, we also do hard money loans. These are slices of hard money loans. I think you're familiar with hard money loans for loans to people who fix and flip houses. So to recap, these hard money loans pay interest rates between 8 to 12%, and it's a very attractive alternative to putting your money in the bank. And syndication deals, Vinney, I am preaching to the king of syndication. They range from 13 to 25%, and sometimes more. We don't go into the very risky deals. So
Very good, very good. No, that's exciting, very exciting. I would like to tell everybody watching us, please join us live. If you're watching on 7 channels right now, we come live to you, Vinney and Beau show, right here. I live in Black Hawk, California, Danville Country Club. And Beau, my good friend, he was in the Bay Area in Discovery Bay, and now in Henderson. Very nice, and we've known each other. And it's exciting union to really look into how we can scale up. How can we bring a lot of great educators, a lot of great guests. So please chat with us in the text and ask us any questions of the like some people are asking. Please tell us where you're from. We come live 9:30 Pacific every single Friday for about half an hour. We used to do 1 hour. That's too long. So we just do it for 32 minutes. And thank you. Victor and Tammy from San Diego, my old portraits. Thank you for joining. And Raj from Florida, Tampa, Florida. Please tell us where you're from, and we would love to catch up with you. All right. Yeah, Badri, all you. Yeah.
No, what I was going to say real quick is that I love what you're doing, first of all, because I think on my YouTube channel, for example, I get people book calls with me like all day long now, and a lot of them are newer investors. They have a small portfolio, and they're really looking to grow their wealth, right? And in the past, wealth creation was, for the syndication, has been limited to accredited investors, and there's a lot of people out there that are making great money in their W-2 jobs, right? And they want to get in the game. They might not want to be the operator themselves, right? But they want to have choices, and they want to have the advantages of owning real estate. And basically, this platform is perfect for them. And as you roll out the option, if you're not an accredited investor, where they'll be able to invest and also get the tax benefits, because they're going to get a K-1, right? So there's potential cost segregation, write-offs. There's tax advantages for these people that are getting started in real estate. And a lot of people that are very busy don't have the time to go out and find deals, but yet aren't ready to invest all their money in one basket. This diversifies what they can invest in.
Bingo.
They can have a blended risk tolerance. Yes. And also, if they pick the right operators, they could do very, very well. And if not, get higher returns than just investing in one syndication. So
I do have a follow-up question on the vetting part of it.
Sure.
How do you vet these sponsors like me or syndicators like me? What do you go by? What's your criteria? Please tell us about it.
Yeah, that's a really good question. So basically, what we have done is, I'm a nerd. So let me just throw that out there, okay? Yeah. So we have built a mathematical model which takes into account dozens of variables when evaluating a syndication deal.
Yeah.
So we look at the entire capital stack. It's almost like a full underwriting process.
Sure.
So here's the key thing, Vinney. I really want your audience to know this. What syndicators typically, that's their job, is to tell you what can go right.
Yeah.
Our job is to tell you what can go wrong.
I love that.
It's completely reversed. When we analyze a deal, we don't look at, if this goes right, we get this. We don't even pay that much attention to the IRR, actually. I mean, that's one small factor.
Yeah.
We look at how much downside protection is there. We look at the terms of the loan, how much buffer is there for new construction.
Yes.
And then we look at, is the deal sponsor friendly or investor friendly? You have great terms, but sometimes sponsors have deals which they make all the money. So where is the investor? The investor is not making any money. And then we look at the track record of the sponsor. I mean, obviously, you have a fantastic record. How many exits they have had. Then we go into the details of the particular property itself. Stuff like what is the crime rate and what's the unemployment rate and all that. So we really have a really good mathematical model. And we look at hundreds of deals and a very small subset. Think of it as a big funnel.
Sure.
A very small subset comes out at the end of the funnel. So
I love it because I think the quality of assets will really propagate your business even bigger and bigger. Because people who will see that your syndications process and everything. They are good operators. They are great mentors or whatever, and with great track record like Vinney Chopra. I know that. I've done 22 exits. I got offers for 3 properties today. I'm selling 3 more. There'll be 25 exits where people have got excellent returns. But anyway, let's talk about these couple of questions. Raj Rudra, my good friend from Tampa, asked how depreciation recapture will be passed on to investors as they invest in multiple deals.
Good question, Raj. So first of all, I want to be very clear about a couple of things. One, we don't take any money in the back end. Okay. So every penny which the syndicators provide, including all the depreciation, comes to you on a pro rata fashion. Obviously, if you invest $10,000 on a $100,000 deal, you get 10%. I mean, you don't need to be a Harvard MBA to do that math, right? So, and all of this is combined in a single K1. The only way we make money, I think it's important your viewers know that, is a simple platform fee. We charge 1.25% for portfolios below 100,000, and 1% for portfolios above $100,000. So that's the only way we make money. So our interests are completely aligned with the passive end, because we don't do GPs. We are passive investors. We invest as a passive investor. We don't have any axe to grind. I mean, we evaluate the deals, and our money is in the deal. So we invest as passive investors and slice it and build custom portfolios. So.
Love it. So general partners, the syndicators like me, are on that side.
Correct.
It's the fund or your fund will be investing into as LP.
As one investor.
One. I got it. And then usually we give out like 80-20. I give out 80% to the investors, right? 20% is the GP side. So answering you, Raj is very familiar because we have done it together. Is that then 80% of the cost segregation, the paper loss from that LLC of the syndicator will be passed on down a portion.
Absolutely. Every penny on a pro rata fashion.
Very good.
If I may, I want to tell you something. There is more, right? Like Steve Jobs said, wait, but there is more. The best is for the last. So far, we have been talking about our B2C strategy.
Yes.
Let's talk about B2B strategy.
Yes.
So what can we do for syndicators like you and other syndicators?
Sure.
So we have an entire B2B strategy where we want to become the Amazon of real estate. So think about Amazon. If you go there, Nike may have a store, Columbia Sportswear may have a store. So we want to enable a solution where you can use this customizable platform to create your own customizable fund. There is nothing like that which exists in the country today. Correct me if I'm wrong, but we have looked. Where today it's a one-size-fits-all fund. So syndicators can create a fund on our platform for their own investors. Their investors are their investors, and they will have a storefront in our mall. And so that's another thing which I wanted to mention.
Oh, wonderful. No, it's very cutting edge. It's really very exciting to me. I mean, I just love that, because with the technology and everything happening and people are able to diversify. And as 10,000 of us, I'm 68. I'll be 69 this year. But
hey, you don't look 69.
Yes, that's what I want to stay like that till I'm 98 when I pass away, 30 more years to go. But the key thing is, we got to make sure that we are doing everything possible to get the best returns on the money.
Exactly.
We cannot leave it. I mean, money is losing its luster anyway, with trillions of dollars being printed, in the COVID and everything and all that, and the 1.8 million trillion, again, another package coming. So our dollar is getting reduced in value anyway. So we need to really invest in right vehicles. So thank you.
So if a syndicator like Vinney had, let's say, 5 syndications going, and he was on the platform on the model we were just talking about, I was an LP investor in your fund, and I wanted to buy into each one at $10,000 a piece. I could do that.
Exactly.
And so I could say, okay, I don't want to just invest in this development in Florida, but you have 5 developments going on in Florida. I want to be
Exactly.
in each one of those.
Exactly.
Oh my
Or
God.
you might say, I like all your, like your favorite child, right? I'm not going to tell you who my favorite child is. But you may like one syndication deal a lot more. All Vinney's deals are great, but one deal might be a little more great than the others, right? You can say, I want to put 20,000 in this, but I want to just put 5,000 in the other deals, right? So that's kind of that's the whole point, the salad bar, if you will.
I love it. Oh my gosh. This way I can raise $1 million at your investor and put that million as an LP into my 4 million or whatever.
Exactly.
Oh
So
my
let-
God. I like it. I like it.
Something which you should know, Vinney, because you have done several funds.
Yes.
We are building a new concept called a mini fund, where you start a fund, you never close it. You open it, it lives forever. You keep putting your syndication deals on that. And then people can come in and invest over time. And there is no concept of closing the fund, because as the deals exit, they can take their money. This is a little more complex than what we can go today.
We should talk about it. Oh my gosh, I just paid a syndication attorney just this week, and he sent me the draft of my $50 million 506C fund, we call it. It's a blind pool fund because of my, bandwidth and my track record and everything. And we're investing in 5 different places, my 5 companies. So
Cool.
no, we should talk and see if maybe you can use it as a model on my fund, which we are doing.
Someone of your caliber would be fantastic.
So let me ask you another question. Sorry to cut you off. As far as the hard money financing you do, so my day job is I arrange all different sorts of financing for developers and so forth. A lot of those deals are bridge type, hard money type deals. How does that work? How does your platform is there kind of like an intake that we put on, you vet the deal and then you put it on the platform?
So I want to clarify something. We are not directly in the business of real estate, believe it or not. So just like we don't do GP deals, we personally don't do hard money loans. We go to other platforms, other hard money lenders, and take a slice of it and then sub-slice it. So
right here, this one, there is this number 1 person right here.
There you go. Cut it. And so, you'll be seeing some announcements soon. So we are going to be launching a new hard money fund platform with another company.
Okay.
And share who the company is, but stay tuned. But the basic idea is we don't do the hard money loans ourselves. We source it from other platforms like Fear Street and so on. And then we slice that into smaller slices. So you get massive amounts of diversification, both in the hard money loans and in syndication.
So it works the same way. I can, in my portfolio as an investor in the fund, I could choose syndications. I could choose some notes to invest in. Is that kind of
bingo? Think of it as, I don't know if you have an investment advisor. You go to an investment advisor. I mean, I personally don't invest in bonds. I think they're a waste of money. But some people invest in bonds. So let's say you want a 20% bonds and 80% stocks. That's the conversation people have. I want 20% notes and 80% equity, similar to the bond stock portfolio concept, right? Of course, in the hard money you don't get any tax benefits. You guys know that. You have to pay regular income taxes on the interest you get from that. So.
Excellent. Somebody asked us about a very good question. I wanted to take us. Ashwini Garg. Hi, Ashwini. How are ya? Please let us know where you're calling from or texting or watching us. Again, please share, comment, like. And this show is going to be live in YouTube, in all these channels. And also we make it into a podcast, by the way. So this whole show becomes a podcast also over the weekend with some great graphics, and it goes into Beau's channel and my channel also. Our channel, I should say. I've got a big team of great people in my team. So this is a good one. Regarding loan, are the general partners only guarantors? That's true, right? Because general partners mitigate the risk of every investment, right? And like you said, so I'll let Badri answer that.
To be honest, I'm not quite sure I understand the question. Are we talking about hard money loans or the syndication loans?
Probably hard money loan.
Hard money loans. So the hard money loans is
No. I read it again. I apologize. I am actually the GP on all my 34 syndications. I'm on the loan. I'm the guarantor.
exactly for syndication. Yes.
Yeah, the GPs are always on the loan, guaranteeing the loan, or Fannie Mae, Freddie Mac, no guarantees, it's non-recourse loans, only the hard bridge loans, we call it. Bridge loans or conventional loans from the local banks. They're recourse loans, by the way. I've been on them 34 times, just as a principal and so forth. Like the one we just bought in Austin, Texas, I was able to get Freddie 2.68% loan, 30-year amortized, 10-year fixed, 3 years of interest only. So once you get to the 20 level to $50 million level loans, the interest rate shrinks. It goes down and down and down. So we boys on the top and the girls have much different interest rates than regular people.
Hey, Vinney is like the Apple of syndicators. He gets money for free.
I appreciate that. Oh my God.
Soon people will be paying Vinney to take a loan, Hey, here, give us the money, please take a loan.
Yeah, that is the book, by the way. If anybody watching us, I know we get a lot of new viewers every week. And thank you. Please come back again next Friday at 9:30 Pacific. And if you have not seen my book or read or something, it's in Kindle, it's in audio, it's in everything, and also hardback. We just signing a contract for the hardback premium edition. I have over 400 5-star reviews across the world in this book in 1 year, in just 1 year,
Very
year and a half. So let's just kind of talk about regarding, thank you, Ashwin, for asking that question. That was really good one. So hard money loan, you're only doing it as you're representing people like Beau, right? And then the people are getting the hard money loans from them, or they're putting money in those hard loans. I didn't understand.
I can explain it.
Please.
So basically, Avastar,
Hi, Lekha.
investor basically buys into the note. So they're not dealing with originating the transaction. They go to a platform that originated the transaction. They vet the deal themselves. Then they put it on the platform, and then the investors that want to put this into their basket along with Vinney Syndication or whoever syndication, right? They can then buy, into this $2 million hard money loan. They could buy a certain percentage of that, but it's you're just buying into basically a fractionalized note.
Bingo.
And so the same thing.
Yeah.
They're vetted, and then they could be on the platform. It's a different source that's originated the transaction. Then you can pick and choose. You can look at the asset. I'm sure on your site there's credibility packages. So like if Vinney was on your platform, I could go and I could see what he's done in the past. I can see his track record. Can you just talk about how I could see like the syndicators on the platform, how I can like quickly check them out? Is that being built on your platform, or is it already there?
Absolutely. We are very, very transparent about who the syndicator is, what the track record is.
Sure.
So every document which the syndicator provides for a syndication deal, not only for the loans you already invested in, but the loans you're browsing, not loans. When I say loans, I mean both syndication deals and loans.
Sure.
You can go through it and see, who's this person? What's he done? The PPMs, the investment deck, everything is, we have a great document management system. You log in, you kind of see, there are two types of investors. Some investors come to us and say, hey, we trust you guys. I want a 80% syndication, 20% debt portfolio, you auto allocate. And then we have fairly sophisticated investors who do direct syndication loans, but they still like the value proposition of our platform.
Sure.
They come through and look and say, hey, I like this. They do the detailed analysis themselves. I want to put 25,000 in this, but I want to just put 5,000 in this. They make that choice. We accommodate both type of investors. Some people don't have the time or the desire or the inclination. Others do. So we can accommodate both. So
it'll be very interesting to see like over years as you're tracking the data of like these basically, essentially the investors that are picking their own baskets to see their performance, right? Like it's going to be kind of cool to say, wow, this investor did a 60% return versus this investor that did 20. And you could kind of give statistics of what asset classes they're investing in.
Exactly.
And the prorations, people can go, okay, this person's portfolio is 50% assisted living, 20% multifamily deals, 10% loans. And that was the last question I had for today, because I think we need to do another one of these to kind of dive.
Really, Badri, I think you've spurred so much interest, buddy. We appreciate you. And again, Raj, we'll take your question in the next one. It's going longer. How can people reach you, Badri? And after the show, I want to chat with you before you leave. So again, I think rebalancing right now, you can do it in your portfolio, but like Badri was saying, you cannot sell but 3 to 5 years, because of some of the syndication packets that I do, 3 to 5 to 7 years that way.
Exactly.
So let's talk about it. Hi, Lekha. Hi, Ashwini, Raj, Brian, everybody, Victor, Tammy, all the great people who joined us today, Lisa and John, everybody. So thank you. How can people reach you, bud? Yeah.
Okay. I am going to give my cell phone number out there.
All right, let's do it.
You can call me anytime. I love to talk to people. Even if you're not interested in investor, as I mentioned, I invest in a huge range of asset classes. About investment, my cell number is 503-860-8374.
503
860-860-74.
Sorry, what was the last four?
8374.
8374, and I just put it in the chat also.
Oh, okay.
Guys, you can see it right there.
Email address. Let me give you my email address too. The email is Badri, BADRI, at investor, AVESTORINC.com.
.com. Okay. Avestor Inc. INC.com. Fabulous. There we are. So it's already recorded and it's there. So I hope everybody reaches out to you, Badri. It's such a pleasure to have you today. And we'll do another show, bring you back in about a month or so, kind of give us the progress. And thank you guys, everybody joining. I think John had to go and I have to do the outro, which should be right here. Bye-bye. See you next week, Friday, 9:30.
Thanks, guys.